Hello from the other side. I'm sorry Brexit made you cry. All right. Good morning, everybody. Comment allez-vous? Roger, Roger. Can you confirm sound, please, and charts, please? Everything good? Thank you. Alrighty then. So how was your week? How are things going? One full week since Brexit, which we shared together 7 days ago. Everything good? Did you give any money back? Yeah, on oil? Oil. Okay. You were buying oil at 50? Very interesting, Pen. Okay, everyone was fine. So no one gave any money back? Just Pen lost some money on oil? Come on, Pen. Yeah, all right. Oh, I see. So, all right. So you shorted after it was already short. All right. Well, that can happen to you, right? Speaking about oil, don't forget we have the rig count today, and that matters a lot. Does that come out, what, end of day today? I don't have the time. I think it's end of day, like late afternoon New York time. Cool. Well, anyways, it's really good that you're here. It's really good to see you. I'm glad no one's reporting any major meltdowns, because I'll tell you what, the cliche is after a week like Brexit, or a day like Brexit even, where everything falls by a million pips. And it's so unbelievably bearish, it's the end of the world. And so what do you do the next 3 days? Sell, 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 and you lose your shirt. And you're like, oh my God, how could I lose money selling the pound? So I was worried about that, because that is the cliche that can and does happen to traders, where you're like, well, what was that all about? This whole sell pound, and then it rallies. So all right, so good thing that didn't happen to you. Must be because of these premium webinars, huh? So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Now, Pan, do you want me to go through oil today? Sure. By the way, my name is Wayne McDonald. I'm the Chief FX Market Strategist for Traders Way. We're a broker. You're a trader. Let's dance, baby. Yeah, we're quick, we're affordable, but most importantly, we're loyal to you, and I'm here to help you succeed. How cool is that? Are there any other requests before we get going? No? All right. So why do I have USD Mexican peso? in front of me. First of the month, yeah. So what are we supposed to be doing with Mexican peso at the first of the month? And like I said, it's usually the last day, maybe, and the first day, maybe. Like it doesn't necessarily last forever. Now, there's a couple of to explain the situation requires a little background, but in the United States, there are some people that were born in Mexico and live in the United States illegally. And then there are people that have never been to Mexico but are Mexican and have relatives in Mexico. And, you know, these groups of people with heritages in Mexico tend to send money home to the family. Now, if you're a migrant worker, and imagine you're an illegal migrant worker, so you don't even have a bank account because you'd need ID and all that kind of stuff, right? But you have a wife and children back in old Mexico, and well, it's payday. It's payday, woohoo! Right? Yeah, Friday. It's not just Friday; it's the first of the month, right? First of the month, yeah. So what's the cliche? The cliche walks down to Western Union, sends some money home to wife and child. That's why they migrated to the United States and risked the process of getting over the border and working, right? That's the whole point, wasn't it? So a few months ago, let's say a year ago, $1.7 billion was sent home to Mexico from the United States of America. 1.7 billion. Doesn't that sound like the ultimate currency trade? Someone earns some dollars and they're converting them on the first of the month into Mexican pesos. By definition, that is a foreign exchange trade. Now, it's not leveraged, but, you know, where I come from, 1.7 billion adds up to a pretty decent amount of money. Now, the curious part is you can anticipate when this $1.7 billion currency trade is going to go through. You have forethought. You have inside information. So let me ask you something. On August 1st, will Mexicans in the United States send money back to Mexico, or are they just going to stop? They're like, oh, forget it. Right? It's going to be there, right? Right on time, right around the first of the month. Maybe a day before, maybe a day after, but then it kind of just disappears, right? Now, let me ask you something. If the economy is bad, are they still going to send money home? Yeah. Okay, the economy's good. Are they going to send money home? The economy's flat. Are they going to send money home? Do they need fiscal? Are they waiting for a fiscal policy change, a monetary policy change? We're like, wow, Migo, I'm going to try to do it. So, do you see the Fed, right? Yeah, you know, no. It's just, again, the best part of, I think, most of Forex is it's just humans. It's not necessarily big bankers pulling strings and secret meetings. Most of Forex is just humans doing human-type stuff, like sending money to home. So we know it's going to be there, rain or shine, as long as they're making money. Now, if the economy is bad enough they're not working, then that's going to be a problem. So a year ago, it was 1.7, right? 1.7 or 1.8 billion dollars. Do you know what it is now, or what it's expected to be today? Because that news comes out. What is the expected Mexican remittance going to? What is it supposed to be today? You know what? It's funny. I had it in front of me. Now I don't know where it is. I believe it's $2.4 billion worth of Mexican peso. Holy smokes! So, what does that say about the economy in the United States? Well, it says either there's more Mexicans working than there was a year ago, or the Mexicans that were here are making more money and sending more money home. And probably a combination of the both. More working and probably more numbers. But, you know, $2.4 billion currency trade, like clockwork. So, you know, regardless of whether the U.S., the U.S. market sentiment is up, down, or sideways, what is likely to happen during that 48-hour period with the USD Mexican peso? What would the currency trade be if money was leaving the United States and going to Mexico? Would you buy this or would you sell it? What's the currency trade? Thank you, Pan. Hey, come on, guys. I want you to participate here. Do you want me to just give you a PowerPoint presentation? Now you look for the 5A cross, and the next bullet says stochastic oscillator should be, and then third bullet point says, why are you guys so quiet? I don't get it. Hello? Yeah, well, this is where this is where you say, "Oh my gosh, Wayne, that's amazing." It's winter, but the crickets are out, Roger, right? I'm telling you, look. Right? You got me here. You and I are in a small, closed-knit group. We're not going to have just random people walking in the room. I mean, we can really, right? We can really roll up our sleeves and interact here. Right? I want to get to know you so I know how to make your currency trading better. And you can pick my brain for stuff. I mean, this is an amazing opportunity to get some answers. Right? So, ask questions. So anyways, look, you knew this? I don't know if you know this. It's just crickets. You guys, maybe you're bored. Maybe I'm not hitting you right. But one would suppose the USD Mexican peso would fall at the beginning of every month. And, oh, my God, now this is also the Bank of Mexico raising interest rates yesterday. There's just another coincidence. If you go back in time, there's, not every time, but much of the time, you see the Mexican peso get strong versus the U.S. dollar right around the first of the month. It's not every month, but very often. Sometimes it lasts for 2 days, sometimes it lasts for 2 weeks. But, if you think if you think $2.4 billion is going to be sent home at the beginning of August, well, maybe you should at least be there on your USD Mexican peso chart, ready to go, right? Hot to go, HOTTOGO. And you're looking for resistance, you're looking for reversal patterns, you're looking just for reasons to sell. Doesn't mean you have to. But you could say, wow, if that remittance starts flowing through, right? the flow of money. If that money starts flowing through, boom. Also, what does it say about Western Union's revenues and possibly even profits? Do you think they'll improve over the next 5 years if the economy improves? When the economy was bad, I was telling people you should consider it. Mexican remittance was a lot higher than 2.4 several years ago, and it dropped all the way down to like 1.6, 1.7. I'm like, yeah, but it's going to there just that one trade is going to go up at least $1 billion a month sometime soon. Maybe that's an opportunity to buy Western Union when there's blood in the streets and the stock is cheap, right? Because a recession in Mexico, a recession in the United States, I think a lot of Mexicans would still rather stay in the U.S. than go home like, hey, times are tough in the U.S., but I ain't going home. Okay. So there you go. There's a nice little move there. By the way, they rose interest rates by half a percent, 50 basis points. Pretty amazing, huh? Looking at a bigger chart here. Is it possible that that's a double top? Yeah, well, whatever. Whatever, dude. I got some new toys and wondering what you think here. You see the stochastic? It's three different stochastics, and they're trying to mimic stochastics on 3 different time frames. So let me go to the 4-hour here. No, let me go to 1 hour. All right. This is trying to mimic the 1-hour stochastics, the 4-hour stochastics, and the daily stochastics. I don't know if you can see them, but I have them in light grays and stuff in the background. And then I kind of have like this time frame here. But it turns hardcore red, right, or hardcore green when all 3 time frames are, in this case, overbought, or all 3 time frames are oversold. It's not just oversold on the 1 hour, but also the 4-hour and the daily. And I have it turn green because it may be an opportunity to start buying. And you can see my regular stochastics looks like this, 1 time frame. The same stochastic, but 3 time frames. And it's like, whoop, 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 whoop. Buy, buy, buy. Sell, sell, sell. How interesting, huh? So just playing with that. What's it called? It is called Stochastic 3, version 2 by Vladi Hayestov. Vladimir Hayestov. Yes, it is. I found it in the thingamabobber of MT4. Yeah. I found it. Codebase, was it? No. Yeah. Yeah. True that. And George, when you have like a fundamental change, like, I don't know. If there's a fundamental surprise, there's a central banking change in policy and all this kind of stuff that freaked the market up and then freaked it back down. And, that's not a technical move. And it's not going to be reflected very well in a lagging, overbought, oversold oscillatic, you know, indicator. It's not code based. Auto Fibbo. Yeah, it is. Yeah. I went through hundreds and hundreds of these just looking for things I might like. Right? And so, like, let's say you're like, oh, universal. How about this? Stoke position. Stoke position is an indicator for mandatory which shows the position and direction of the 5 minute and up, like whatever. So you can double click this and it'll open up its page. I don't know what this is. Okay. And it tries to explain what it does. Oh, so it does this. It gives you a little direction. It shows you multiple time frames and tries to help you sort through, right? All right. So let's say you want this. You're like, I like this. You click and install that file, right? So you can just click it and download it, and I can put it on my MT4. Okay? So that's how you do that. Yeah, this sucks because it's not sortable and it's not easy to use and sometimes if you do something it goes back to the beginning but yeah, you can try to find and then I think you can sort it by EAs only, indicators only, scripts only. Um, or look, apparently you can just download it from here. But whatever, it's something. So spend an hour or something. Okay. So how'd you do this week? Custom period last week, June 25th to July 1st. All right. So how'd you do? Detailed report. Save. It already exists. You want to replace it? Sure. Ciao. I made 77 trades. 61 of them were profitable. 80% winners, 20% losers. Did about 5% for the week return. You could see yesterday Carney came out and said he was thinking about cutting interest rates, and he screwed me over. F you, Carney. But otherwise, pretty steady, pretty low volatility, except for that big crash yesterday in the pound. Damn you, Carney. But anyway, so 77 trades, 80% winners. A, B, C, D, or F? What do you think? What would you say? Hello? Really? Double B. Let me ask you something then. How many people go to other webinars here at FX Street? Yeah, well, everyone's. How many of the experts show their trading stats? Like I just did right there. Here's what I did this week. Pulled it right off my MT4. Oh, all right. Well, cool then, right? So I don't know. You guys, again, I showed it to you. Nobody said a word. No feedback. No good. No bad. Oh, double B, Wayne. I guess only 80% winners. Yeah, but you only made 77 trades, Wayne. All right. I guess I was lazy this week. But all right. So you guys are, this is like the quietest webinar ever in the world. So I'd like you to get more involved or fired up or something, right? What's going on? I'm worried about you, babe. All right. Biggest loser today, what? Pound yen down almost 1%. Kiwi dollar up almost 1%. Gold almost up almost 1%. Is that right? Wow. All right, so why don't we start doing that? Let's take a look at at gold. There was a time I was setting up a head and shoulders off resistance. That didn't work out. But nonetheless, it was a possibility. And I think what set this up was this looked like a lower low to me. Okay. Now, the prime reason for gold to go up these days is flight to quality or safety. Okay. And the other one is negative interest rates. Okay. Okay. So that's the only reason really for it to be going up right now, which is fine. The world has changed a lot. 6 months ago, I said there was no reason to hold gold or to own gold down in here. And then suddenly negative interest rates. You're like, all right, so now there's a reason. There's your reason, right? So that's a pretty big move that we had, Brexit down to the weekly central up. Pretty typical play. You drag this resistance across. There's the top. Let's see if I can actually get this more precise. There's the top back here of April, and there's the bottom in June. Well, not really, but after Brexit. Isn't that amazing? So when I see things like this, I tell myself that's not random. Okay? Right? Gold coming up, and it seems to me if we can get through this monthly pivot. So have you gone through all your monthly pivots yet for July? Yeah. Diamonds on the soles of my shoes. Take away these walking blues. Diamonds. He's like, I can't think of anything to rhyme anymore. I'll just say this. Right? So, all right. So that's that. Um, if you can get through that, then the projected high. The way I would do this is I would fib it just to kind of give me an idea. So I asked if everyone did their pivots. Nobody said no, so I'm assuming you've done all your pivot analysis for the month. You got your July on. You got your trade plans on, so that's cool. Um, this kind of gives me an idea. A 50% often predicts a 1382. That's the conservative target. And 1382 gives me a monthly R1, and I'll squeeze that in there, weekly M4. So the target here is about 1400 and collapse off of the psych level. Okay. So hopefully you get that. Now, zooming back out farther, does it mean anything? Should we be worried about 1400? Yeah, right? So I'm following it across here. Here's 1400. So this is where I'm projecting where we'll go. And yeah, that seems like an appropriate spot to stop. Don't you think? Okay. Diamonds. And so, yeah, there's your target for the month of July. And then if you're a bear, you'd maybe sell that. But very often, July, if you've, I've been around, right? So I've been doing webinars at FX Street for 11 years. Um, so if you know me, if you've been around, if you've been hanging with me in over these years, you'll know that I basically just scalp July, and I've actually already started looking at the 80% winners that I had last week or this week, I guess 80%. It was because I was scalping, right? So there's always a story, right? Where is it? It's gone again. Let me run the report again. And July, I tend to just keep going the same way. Now, Brexit obviously is unique, and maybe it'll change something. But out of 77 trades, right, going back to here, 77 trades, the average profit on a trade was only $75 on a $50,000 account, right? So not a big deal. So what does that add up to? Well, I'm making 25 to 30 pips a trade. It's like just little pissy little scalps. But that's why the winning percentage is high, right? I mean, you can't survive, as a professional trader and only make 25 pips a trade, even if your winners are 80, even if you do 80% winners, it's just not enough money to get filthy, stinking rich. But July, and in the July can offer a unique risk. So I started this week just scalping because I after Brexit I didn't have any weekly pivots I could trust. I had no monthly pivots because we'd blown through all the monthly pivots by far. Uh, and really, the market doesn't trade technically after a fundamental event like that. And so I cautioned clients at Traders Way to not give money back by thinking like you have to sell a pivot because you're at a pivot, or you have to sell at a moving average because it's a moving average. And this is what we've always been doing. Yes, but this isn't the market we've always been trading, right? So it's not necessarily technical. It's people getting in, it's people getting out, it's people being wrong, it's people being fearful, it's people being greedy, and it all falls apart. It's sort of like using using a Black-Scholes option pricing model in a highly correlated volatile market. It just doesn't make any sense anymore. Now, maybe it makes sense when things are normal, but things become abnormal a lot, and the models will fail. So I'm just saying our typical technical analysis had additional risk this week, and I needed to change my trading behavior, and so that's what I did. Now, so there are only 30 or 40 pip winners, 25 or 30 pip winners. The interesting thing is I did do 28 winners in a row. So, I had a nice little streak in there. But, whatever. The worst streak was 4 in a row. My best streak was 28 in a row. So, I could live with those numbers. Yeah, but it's only the sign of the times, right? But that's not necessarily good. So, you can lie with stats, right? And what you could do is you could have 90% winners and never make any money. The reason is 90% of your, let's see, the 90% winners that you have are only 5 or 6 pip profits. And you might hold your losers negative 50, but take plus 5. That's your pain to gain ratio could be 10 to 1. And honestly, I've seen stats like that, and these guys are holding negative trades of 300 or 400 pips, and then when it comes back, they take 5. Boom. I have 95% winners, and you would never invest into somebody like that. So it's not that I'm like, oh, look at me, I got 80% winners. I'm not trying to suggest that. Who cares? Now, my profit factor is 2 to 1, right? My expected profit, even on this little account, every time I pull the trigger, it makes a pretty reasonable amount of money. That 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 Carney news yesterday brought some volatility to my portfolio, which I didn't like, and it dropped, and I had to hedge, and I had to work pretty hard to hedge all of that yesterday. So that kind of sucked, and that really effed up my stats because there were some big losses on the surprise there, and then I had to hedge them, and it really messed things up. It's more volatile than it actually looks, but I hedged it out, and we ended the week on trend. But the point and the real message, okay, the real message here is that risk, because of a change in market conditions, became more apparent to me, and I changed my behavior in that market. I didn't do what I would do in a typical week. And that's more important, right? And then why July? July, we can very often see a reduction in volume and volatility. So can I expect swing trades to produce 300 pips like they normally do? Or is it reasonable to think, well, often I get 300 on a swing, but we might be just stuck in a range here for a while. And if that's the case, what I have found over the years of trading is that if I believe that the market could consolidate like that, it means I can get into a good trade. I buy at support. I normally get 300 pips on trades like this. And instead of the 300, what it does is it goes up 150, comes down 150, and knocks me out at break even. I'm like, what? And then I try it again. Buy at support because it all sets up again. I buy it. Oh, this time it's going to break out. Goes up the resistance, comes back. And I leave a lot of money on the table because it just never breaks out. It goes from support to resistance and back down to support, or even worse, buy at support, goes to resistance, comes halfway to support and almost to resistance, and it just moves sideways all this time, and it does nothing anyways. So in July, and as you can see, what I started doing here, to get a 3% or 4 or 5% return for the week, I had to take profit. It's not like, for example, is 77 trades in 5, well, it's even less than 5 days because it doesn't include the rest of the day, right? So in 4.5 days, is 77 trades a reasonable sample size to do some sort of reasonable analysis? Okay, Catherine says yes. Thank you. Would you consider a 30 pip trade a reasonable amount of profit for short-term trades? Whether it's a scalp or a spot, whatever you want to call it. Right? They're not trades designed to fudge the numbers like a whole bunch of 5 pip winners, right? No, they're 30 pip winners over and over and over and over. And, some of the trades are bigger, but so let's say out of the 61 winners, let's say, I don't know, 50 of them are about 25 or 30 pips. All right. So how would you call it? Is that a scalp to you? When I call it a scalp, you might say, well, that's Wayne, 8 pips is a scalp, right? But I think we could agree that whether it's a scalp or a spot or a day trade, whatever you want to call it, the strategy was designed to take the money and run. Book the profit, right? High percentage shots kind of thing, right? I'm not going for three-pointers. I'm dunking. Right? Or I got little jump shots from my favorite spot. Like these are baskets I'm going to make almost every time. And no, there's no individual trade that wins the game, but I'm going to throw them in. Now Roger knows me well, and he's like, "Are they 25-25 OCOs?" Well, that's what it. Wait, Roger, are you saying I might have actually carried out the strategies and techniques that I actually teach every day? Well, that's weird. Right? Well, that's weird. Yeah, but I don't know. I'm a very skeptical person, so I always think that very often people are giving advice, but they're not actually doing it themselves, right? So I guess I didn't read it in a book somewhere, right? Actually, so that's what's happening. So I'm in the business of making profits right now. I'm not building portfolios. You see the difference? Now, in August, I am going to then transition from income producing trades, which I consider this income, to wealth type positions. And these are trades that I plan to hold, somewhere between 250 to 1,000 pips each. There's a difference, isn't there? The way that I manage the lot size, the way that I manage the stop, how far the stop's going to be, when do I move it to break even, when do I lock in profit above break even, when do I get out, everything is different. So what I'm trying to teach, since this is, I think these premium webinars should be more advanced, right? Than just 5-8 crosses. Hey, look, this is resistance. Hey, right? Hey, look at the double top. Did you see this double top? I'm trying to teach you how you should look at the market, analyze its conditions, analyze the risks, and then adjust your trading to fit the market conditions. Right? So I told you how I changed this week, and I proved it. I'm telling you when I'm probably going to change that again. Okay? Did everybody understand the concept of income versus wealth type trading? Yep. So I'm shooting at rabbits. I'll continue to shoot at rabbits for probably 5 or 6 weeks, and then I'm going to go after the big game again. Cool. So everyone's on board. Right on. I can show you this. U.S. retail sales, U.S. GDP, non-farm payrolls and unemployment rate, consumer price index for the United States, and the commitment of traders report for Euro. On my MT4, oh snap. Okay. So, we need to do oil. So once again, we have our rig count. Does everybody know what I'm talking about when I say the rig count today? Everything in the world is available on that code base. So, all right, so no. Okay, so Baker Hughes rig report. It's not out yet, I don't think. Here it is. Let me bring it up. I'm sorry for breaking your heart. All right. June 20. What? All right. So the last one was June 17. Okay. So somebody's been adding some rigs. Do 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 do. La 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 la. I thought this would be a map. All right. Anyways, a rig is built to suck oil out of Mother Earth. If there are lots of rigs, what does that tend to suggest about the supply of oil in the world? Well, Ron, just because you have an oil rig doesn't mean it's pumping oil, right? At $25 a barrel, it may be too expensive to produce the oil, so you turn it off and send everybody home, right? So, you know, we have to do a chart here. Right? Demand curve is always down. Okay. So that's demand. Always label your chart, right? This is going to be price. And this is number of barrels, right? Okay. Okay, so for example, to the demand curve, why does it slope down? Okay, if oil is $100 a barrel, are you going to demand a lot of oil? Are you going to buy a lot of oil in oil-related products, or are you going to cut back? It's too expensive, right? So supply down here, I have this as like number of, I guess I could put like supply, or we'll just call it oil, number of barrels, whatever. So supply will be low, right? So let's do this like, we'll make up numbers. 1, 2, 3, whatever. Boy, it's hard to draw. And how much oil? 1, 2, 3, etc. Right? So the numbers get bigger this way, and the numbers get bigger this way. Okay, you following me? So if price is really high, way up here near 3, demand is going to be low. Well, what if prices are low? How much are you going to demand? A lot, right? In fact, you could even just buy it, put it in storage because it's so cheap if you thought prices would go up. So here, if price is low, you're going to demand a lot. If price is high, you're going to demand very little. You got it? So demand is, we're actually going to leave stable, right? Demand doesn't change. Here's supply, and here's the equilibrium point. The price is 2. Okay. So if more and more and more oil rigs come online, meaning the oil companies turn them on, what does that suggest about supply? Is supply going to get bigger, or is supply going to fall in some point in the near future? Oil rigs produce oil. The more rigs producing oil there are, the higher supply is likely to be. So does the supply curve move to the right or to the left? to the right. So we move this supply 1 now, creates the equilibrium price here, right? Price 1. Now, shifting the curve to the right means we go this way, okay? Demand is constant. Supply moves to the right. There's more oil than there used to be, and we get a new equilibrium price of 1. So we call this P2, right? Or, right? Price number 2. So the supply curve moves to the right, and price falls. Price is down. The more rigs you produce, as long as demand is constant. Now, of course, that you may say, well, Wayne, that suggests they believe demand will go up. Well, or maybe they just like it, the price is better. Okay? And therefore they're willing to do it, right? But it does suggest if the Baker Hughes report that comes out later today, if the number is up, that could suggest to some market participants in oil that oil prices could go down in the near future. For example, there are 438 rigs in the United States that were turned off last year. More than 50% of the oil rigs in the United States were turned off. More than 50% of the oil rigs in the United States of America were turned off last year. Well, Roger, that you need to do that. I want you to do that. So, Roger, would you like to know how to do that? Roger says, please talk about the relation of inventory and storage. Let's see. Let's see. I have it somewhere. I have it. Oh, here it is. You mean this report? Oh, I just love my job. I love being a currency trader. I hope you get that. I hope that comes across. Like, yeah, well, this is what I do. Or like, oh, you want to know you want to know inventory levels of oil? Oh, I have it right here. Yeah, here they are. And in fact, so what you're looking at here is the blue line is the amount of oil in storage in the United States of America. Okay? And the gray area is the sort of like the 2 standard deviations of normality over the course of decades and decades of data. The high part is like, think of it as Bollinger Band, right? Shouldn't price stay in the middle of Bollinger Bands? That's what 2 standard deviations, right? It's when it goes way up, it has a propensity to come back to the mean. If it's way low, it has a propensity to come back to the mean. And very rarely is it outside of the Bollinger Bands, right? Well, consider this gray area, the normal fluctuations of the range of on oversupplied years, we're way up here in June. In undersupplied years, in June, we're at the lower bounds. And almost always we're somewhere in the middle. And normally you'd say, well, we're at the higher range of supplies than normal, is how you'd interpret this. So that's what this gray area is. December inventories are pretty low and almost always pretty low, but around this 350 million barrels area, almost always in December. Okay? and then up, up, up. Now, check this out. Holy smokes. We have so much oil in supply that it doesn't even fit on the chart properly. Wow. And notice the oil inventories are coming down, but it always comes down this time of year. How many people have heard from me at, let's say in the month of December or January or March or September? How many people have heard me say that June 1st is peak oil for the year when supply is highest? And we just talk about it not in the context of now or in the context of news that just came out, but just normal operating procedure for trading oil. And that is proved here, okay? The 5-year average and then before the 5-year average, you notice that the top of the year of supply is June, right? And that, supply came down here in a June. Supply is coming down now in a June. So once again, I'm just backing up the facts that I've put in the time and the effort to understand these markets, and therefore I can plan trades with precision months in advance. Yeah, it's cool stuff. So that's where you would get your data. Go to the EIA. So the EIA was created when the world realized that oil prices were unstable because nobody was talking to each other. And by nobody, I mean like Occidental Oil in Libya was not talking to the Venezuelans with their heavy crude, and Saudi Arabia wasn't talking to Iran, and who knows what the Russians are doing. Canada, the United States, fine, but China was importing, but then they were exporting, and just whatever. No one actually knew how much oil there was, where the supply was coming from, who was pumping how much, and what happens to price when supply and demand is unpredictable. Well, you've seen it in recent years. Prices are so high that it stifles the economy and the economy collapses, or prices are so low that it costs more to produce the oil than you're paying to buy it at retail. So, they shut it off until supply is shocked again, right? So it's very unpredictable, very volatile. And if you're a producer of, like, let's say, plastic products, and you can't count on a stable, polymer price, then you need to be in the hedging business, and all of a sudden it's too hard to be in that business. It's too risky. It's too expensive, right? Because you never know what the price of plastic is going to be. So it requires too much of your time to figure out. So you just would rather not do it. So anyways, the EIA came about. Energy Information Agency. And it's really a cooperative thing for oil producers so that we have stability in the market. And stability is good. Volatility is bad. Okay? There's some neat information here, by the way. All of these reports I look at and I want to read. Stripper wells. I'm like, strippers? Did he say strippers? Yeah, stripper wells accounted for 10% of whatever that means, right? So now you have to Google, what are stripper wells? Yeah. But hopefully it's amazing. Right? Does anyone know of another agency that might be interesting, that might produce information that could help you be a successful trader of not just oil, but of commodity currencies? Related to oil? Anybody? Does anyone want to know? Okay. What's the counterparty to OPEC? So OPEC got too much power. They started using oil as a political weapon. They drove prices up just for their own sake. So the world responded to OPEC by creating the counterparty to OPEC. What agency? Because it's an agency of governments, just like OPEC is a cartel. What's the Western world's response to the oil cartel? Did you know there was one? There's another cartel of oil, specifically created to offset the power OPEC created for itself by creating a cartel. IEA. The International Energy Agency. Say, what? Here's the other OPEC. This OPEC also wants price stability, like OPEC does now. But there was a time when OPEC just simply wanted prices to be higher. At first, they wanted it to be prices to be fairer. Then they realized, oh my God, this is making us so much money. And then they got greedy like everyone else gets greedy. So anyways, so the Western world, so that, right, the OECD countries, at first it was like Canada, the United States, New Zealand, Australia, that, you know, Western Europe, that kind of stuff. And some other countries have been added. Hey, look at that. That gas day. G20 gas day. Stinky lunch, you know. So anyways, this is a cartel of, and this site will, where's the, here, this is what I wanted to show you a map of the participants. I don't see it here, but you can look at it. But this website also produces fabulous amounts of energy or information about energy. And here's why I bring it up. We're money traders. Okay? Money changes value when it crosses a border. Right? And when economies are expanding, they tend to be energy intensive. Okay? They demand energy. No, energy just isn't magic. You need to get oil or coal or whatever it is, nat gas. You need to get it out of the ground and you need to move it somewhere. And someone needs to be able to buy it, and they also need to be able to hedge it. So something physical moves across borders and, you know, one way, and money is moving the opposite way. Okay? And if you can figure out whether this is increasing or decreasing, and in particular, where is it going and why, both the product and the money go in the opposite way, you might be able to turn a profit as a foreign exchange trader, right? Because an expanding economy will also do things like slowly increase income levels in that country. And then that will change the marginal propensity to spend. OMG, too much education. With the marginal propensity to spend to go up, like retail sales, right? Durable goods. Eventually prices are going to go up. And then what is the central bank's response to prices going up? Interest rates go up. And when interest rates go up, it tends to attract money. Money tends to flow there. Euro has negative interest rates. What if New Zealand was paying 8% interest rates? Where would you like to park your money? Where you're guaranteed 8% or you're guaranteed to lose money? So, their money would, in my book I call it, money magnets, right? Money would actually be attracted to that area. Okay, so on and so forth. Again, not just because of the high interest rate, but if inflation, good inflation, is there because the economy is very productive and in near full capacity, everyone's working, the country's exporting like crazy, there's huge demands for its products, its services, its resources. Money is just pouring into the country. That's a good thing. Right? Russia has high inflation. Venezuela has high inflation. Is that are those places you want to invest your life savings? They do pay high interest rates. So not all inflation is equal, is it? Why is it bad inflation? Why does Venezuela have 700% inflation this year? Isn't their economy in shambles? Aren't oil prices way down? Why are they not like Europe that have negative inflation? Where the hell is Venezuela getting all this inflation if the Europeans have negative inflation? Does anybody know? Venezuela borrowed money. Yeah, but the Europeans borrowed money, right? The United States borrows amazing amounts of money. How come we don't have huge inflation in the United States? Like, again, Venezuela, I'm not joking, 700% inflation this year. Well, it turns out they borrowed money, spent it all, they don't have any more money, so now they're printing money. Literally printing it. Making it up out of thin air and paying for it. So one of the things I've had to do is, come on. Okay, let's do it this way. Here's my chart. This is the supply of money. So this is money, how much money, and this is what the purchasing power parity, purchasing power of a dollar. All right, so demand's equal. Right, so demand's constant, and this, right, so label it again, demand, supply of money, supply one. So Venezuela doesn't have any money, but they have huge amounts of debt. Okay, follow it? Great. So they don't have any money, they have huge amounts of debt, and they have a bond due. And the bond is due, they owe $1 billion today, right? So what does Venezuela do? Oh, we'll increase money supply, right? So the supply of money, these are supposed to be arrows moving this way, the supply of money shifts to the right to show that there's more money, the amount of money, the quantity, as they say, the quantity of money. So let's say 1 trillion, 2 trillion, 3 trillion, 4 trillion, 5, right? So we went from 2 trillion to 3 trillion, or in this case, billions, or whatever. The money, right, moves there. What happens to the purchasing power? The purchasing power went from value 1 at the equilibrium price between supply and demand curves, shifts to the right, the new equilibrium here, so you have more money that buys you less purchasing power, value 2. So What happens to prices when you want to buy foreign goods now? You want to buy a Coke with your Venezuelan money. Well, Venezuela keeps moving their supply of money to the right. They keep printing more money for every debt. And then purchasing power goes from value 3, value 4, it keeps falling. So, right? So if you buy something in Venezuela for 1 Venezuelan peso, whatever, that doesn't change that much. But what if you wanted to buy a Coke? The Coke is normally worth $1. Let's say 10 years ago, 1 Venezuelan peso bought you $1. Great. So a can of Coke was a peso, right? I don't know what these are. These were going to be cans of Coke. All right, but all of a sudden, more money was printed, more money was printed, more money was printed, more money was printed, more money was printed. And now, to you, a Venezuelan peso is still a Venezuelan peso, but you might need 10 pesos now to buy 1 can of Coke. Or, in fact, it could be 320. A can of Coke might have gone from 1 peso to 320 pesos. What happens to the sale of Coca-Cola in Venezuela? How many cans of Coke now sell in Venezuela compared to before? More or less? Coca-Cola actually stopped selling Coke in Venezuela about 6 weeks ago. What? Coca-Cola pulled out. Nope. So what happened to prices? Prices went up. Is that good inflation? Was it because everyone's working and everyone's rich and money is just flowing in and like foreign direct investment, factories are being built, infrastructure is being upgraded? Is that the type of economy they have? Check it out. No Coke for you, Venezuela. Mom. Why do they have pictures of my mom on this website? So anyways, no Coke for you. Empty Coca-Cola cases is seen at a food stall in the street in Caracas. Yeah. There you go. So Venezuela can't afford sugar. Oh my God. Did you know Venezuela has more oil than Saudi Arabia? And yet they can't afford a can of Coke? What do you think of socialist pig dog communist scumbags now? How could you screw that up that bad? I mean, when you take all the other socialist economies that have worked, they should have used them as a model, right? Like you have well, I guess the Soviet Union's not a good example, and pre-capitalist China was probably not a good example. North Korea's probably not a good example. But there's Cuba, but oh yeah, wait, that's probably not a good example. But I don't know. Just like, all right, so they have what you would think to be all the money in the world. You'd think they would have available because they've invested so much money into building the finest technology into producing their oil, making it available globally. And they should have the best universities and the best museums and paid for not on debt but on cash and yet a can of Coke is too expensive and they have more oil than Saudi Arabia. I mean, like, wow. Wow, huh? Isn't that just like shocking? It's like saying, what happened to that dude over there? Oh, well, he won the lottery a few years ago, ruined his life. Say what? Yeah, he won like $250 million and it ruined his life. Now his life is in the toilet. Really? Well, I'd like a chance to screw that up too, right? Just amazing stuff. So there's a little bit about macro and microeconomics. I didn't plan for that. Based on supply and demand curves of money supply and of oil inventories, based on an increase or decrease of rig counts. Wow, what a strange day. But this is a premium webinar, and I hope I covered something that doesn't get covered on a regular basis at FX Street. I hope something piqued your interest and said, wow, that was premium. So I hope you watch the rig count. I hope you go to the EIA and the IEA websites and research their statistics that they provide for you for free. So now you have PhDs working for you for free. And you could then look at oil prices and maybe what the market expectation for oil prices in the near term are likely to be. Because, if you were a professional trader that traded the Canadian dollar or oil futures, for example, you would know this information, wouldn't you? So time to start acting like a professional too, right? So it's just all funny how, I didn't plan any of that. So it's funny that I had all those charts actually open. So maybe that's the ultimate lesson, right? And then, of course, only 80% winners this week. So I'm sorry, but I was tired after Brexit. Thank you. I like the interaction, guys. I love the interaction, the participation and stuff. I don't like reading bullet points on a PowerPoint. So thank you for your loyalty and for being here, and thank you for being a premium member of FX Street. Thank you to FX Street for being tall, good-looking, kind-hearted, intellectual, athletic, and downright nice people. Thank you, FX Street. Thank you, moderator, for moderating like no moderators moderated before. There's no moderator like our moderator, like no moderator I know. Yeah. So everybody have a nice weekend. Happy Canada Day, eh? My family from Canada says, whoop, whoop. My American family says, what? Canada Day. Canada Day? Yeah, Canada Day. We got our independence too. We got rid of the English. Like Canada? Canada has I'm like, it's like 4th of July, except it's like on the 1st of July. And they're like, I don't get it. Well, your 4th of July, you kicked the English out of your country. Well, our 1st of July celebrates that we kicked the English out of our country. They're like, yeah, no, I don't get it. No. Where's Canada? Forget it, dude. Just have another beer. Yeah. And what about the French? Yeah. So, yeah, happy 4th of July to all your Americanos. Canada's what? What? Yeah, I'm being facetious, but not much. Yeah. So, anyways, peace on earth, peace on earth, peace on earth, peace on earth. May the pips be with you. May your profits be above average. I'll see you next week, next week, next. And you know what? If you want to hang with me every day, open up a trading account at tradersway.com, and we'll make beautiful music together. Take care. Bye bye.